All right, welcome everybody to this week's client support webinar. My name is Bennett McDowell with traderscoach.com, and today is October 30th, 2024. All right, let's see what we got here. Jerry's asking, do you guys do DST? Just trying to ensure my timing continues to be correct. I think you're here, so that's a good sign. So I think you're okay. In any case, welcome everybody.
What's DST?
I think it is probably
The time changes, maybe.
well, no, it's oh, I forgot what it stands
Daylight
for.
savings time.
Yeah, exactly. Okay. So you know that type of thing.
So
But yeah.
maybe I can answer that, Bennett, only because Jerry and I have talked about it a lot. So Jerry, basically we are, even though we're in Arizona, we still are continuing to start all of our events at Pacific Standard Time. So that go by the, yeah, so yes, it will shift. So thank you for asking. Basically, the Pacific, I don't know. Good question.
Because
Jerry,
you know, it's the same time as California for a certain part of the year.
right. It's not, it hasn't shifted yet. So Jerry,
Right.
he says it's Sunday. Okay, so this Sunday. Good to know.
So it'll be next week.
Good. Yeah. So next week. Okay.
I didn't realize it shifted already this week.
No, Sunday, this coming Sunday.
Yeah, I know that. I didn't realize it shifted so soon. Boy, time flies. All right, good. All right, so Gene, since you're on, any other announcements?
Well, welcome everybody. It's so good to see everyone here, and Cleo and Jerry and Neil and RJ and the gang. Good to see you all. If you could just give me a hello in the questions area, that just lets me know that yes, you can see where the portal is and go to webinar, and that is the location that you can put questions in for Bennett. So he'll be going over a lot of great topics today, and if you have questions, you can ask him there. And in the meantime, I would love to invite you to our YouTube page for Stock Analysis Friday, and it starts at 8 a.m. Pacific time every Friday, and here is the link. So with that, Ben, I'll turn it back to you. And Cleo, good to see you too.
Okay, thanks, Gene. And the link you put in is in the chat area, so that's in your webinar console. All right, so today I'm going to talk about day trading. When we get going here, I got a few, of course, the administrational items to go through, but that's going to be the topic for today. Also, too, if you guys have any questions on any of the software you're using or any of our course materials, feel free to ask, because that is the purpose of the client support. Not only do I want to provide a little education, but also make sure everybody is a-okay with all of our products and services. All right, so let me get going here and go through the fun stuff. And the first fun thing, of course, is the risk disclosure. Every week we got to cover this. But in any case, there are risks in trading the financial markets or even investing in them, obviously. We want you to do it with money you can afford to risk, called risk capital. We also want you to be able to know how to do risk control on each and every trade. And I've written several books on that topic, so I'll get to that in a momento. Also, too, anything that we may cover that you want to act on, please run that by your financial advisor just to be sure that is suitable for you. I don't know your personal situation, and they do. And of course, no guarantees in the market. Everything is in probabilities. All right, so we are going to talk about day trading today, and I do want to put a link up in the chat area as well. So you see, Gene, you're not the only one that does links. Okay, so I just put a link up to a funding company specifically for day traders, and it's one I use. In fact, I traded all day today. I traded the NASDAQ, and what a close. Literally a few minutes after 1 o'clock, it basically, that's my time, basically we had about 100 to 120 point swing in the market, all within probably 10 minutes. So pretty quick going there. But in any case, what I recommend if you're interested in day trading is use one of the prop firms. Yeah, there are rules and things like that, but I got to tell you, if you use risk control anyway, the rules are not going to be daunting or overwhelming. And what a great way to get free data as well. You know, if you subscribe, for example, to one of Apex's evaluation accounts, which is their unfunded practice accounts, and you have to pass that first before you get funded. But if you subscribe to that, and with my link, you can get it for, depending on what size account, for a very reasonable price, anywhere from, I think, like 35, and if it's a large account, it'll be up to 50. But that includes your data for all the futures markets. So that's a good way to get data, because you're going to pay for that anyway if you had to purchase it. So not a bad deal. And then, of course, when you get funded, you're trading their money. And so then you actually get a 90% payout on the profits. And I've got a friend of mine that just cleared $300,000 this year so far in prop funding income. And right now I'm trading the PA accounts as well. So it's really I think it's a great business model. And I think it's something you should consider. And you can certainly check it out. Use my link and take a look at it there. The nice thing about trading the futures market, not only the leverage, of course, but it's all, you know, CME, so it's all electronic. So you push the button and basically you're filled. And during the New York trading hours, liquidity is phenomenal. And you can trade the ES or the MES or the NQ or the micros, which is the MNQs. So depending on, you know, your account size and your comfort level, there is something there for everybody. Also, too, you can trade at night. We have a lot of people that are working during the day that are trading at night, and I trade at night as well for a few hours. So you have the Asian markets and the London markets as well. And from my understanding, probably, you know, they talked about the New York Stock Exchange is going to open up and widen its available hours. And I think they'll do the same on the CME eventually too. So that will increase even liquidity even more overnight. But a lot of fun, great way to hone your skills, and we'll go over some of that in just a bit. All right, so when it comes to books, I've got a few on money management and my new book, The Art of Trading, which is completed and being published by Wiley Trading. And that will be available this year, I'm told, by the end of the year, probably December-ish. It should actually hit the bookstores, and I'm pretty excited about it. I think it's about, what, 580 pages, I think, is what the final count on that was. And basically, I think it's going to be the best book I've written to date, so you might want to check that out, and you can pre-order it now. I'll put a link under the bottom there in the recording area. Elliott Wave Technique Simplified is another good one on Elliott Wave for those, and you can check that out. And of course, our software tools are available on our website, and those are charting software, we've got scanners, and we've got risk control software. So just kind of wrap it up with that, and we'll jump to some of the charts. Before I get going, let's cover a couple things. How many people out there are day trading or have day traded in the past? And what were some of the issues or things that you may have encountered that you didn't expect, both from an emotional standpoint as well as a financial? So feel free to type that in. And in the meantime, I want to just cover, when we talk about day trading, really there's quite a few different styles, but the two main styles is scalping, all right, and actually trend trading the intraday market. So I'll just call this trend over here. And they're two different animals. And I'm going to also talk about how that differs in terms of prop trading, all right, and what account size you should get to basically tailor the kind of day trader you want to be or are. All right, so when we talk about the art software, you know, we're talking about primarily with the pyramids and everything, that comes under the realm of trend trading, right? So that would be there. But there's also art reversals, and that could be under scalping. So let's just put P for pyramids and AR for reversals. I'll get AR, that stands for art, for pyramids. So that's kind of one area as well. Now, when you're scalping the market, as a general rule, a lot of factors come into play. Obviously, the time frame you want to use. You know, you can use minutes, you can use range bars. A lot of people in the NASDAQ like to trade the 22 range bars. All right, I prefer basically looking at 3 time frames, and that would be the 1 15-second and then the 5-minute. But when I scalp, I'm also looking at art reversals when they occur in fair value gaps and order blocks. Okay, that is something I look at very, very closely when I do that. When I trend trade, I'm more concerned with price structure in terms of when a trend develops, I want to keep my stop not too close, but on the back sides of those pyramids and try to get as much juice as I can out of the trade. So, you know, it's funny, when you talk about trend trading, I'm going to just draw this for one quick second, and then we'll kind of look at the charts. You're basically, you know, maybe you get a bracket market, a breakout, and then it goes, right? So when you're trading like this, the idea is that, and hopefully you get a pyramid up here early, but the idea is your stops are then brought down to these areas. And a lot of traders, when they're trading a very short time frame, it can be kind of difficult to stay in an intraday trade that long, because a lot of times, you know, you'll be watching the price bars, they'll be going up, they'll be going down, and it's very easy to get sucked into a fear and greed type of mindset, where as soon as you're up a certain amount of money, you want to take the profits and yet not follow the structure of the pyramids to keep going with the trend until you're stopped out by a pyramid stop, which would be basically the market changing structure. It's called breaking structure, also called BOS. If you traded enough, you've probably heard that. So the idea behind a trend trade is you've got to have the wherewithal to stay with it. And while that may sound very easy, in reality, it can be difficult. And so here's where your personality type can come in. Are you going to be able to do that? And some people would prefer this, okay? Or is this more your personality that you like to scalp intraday? All right, so that kind of comes down to your personal style. Now, if you're used to trend trading, like I always have been, both end of day and intraday, when you try scalping, that's a whole different animal. All right, it's a whole nother set of learning. And I have basically this year practiced on my scalping, and it's a lot of fun, but it's a different animal. And so when you talk about a scalp, all right, for example, you know, we'll take our trend, remember our trend trade from over here. In a scalp, you may be only going for sections, okay? It could be up and it could be down. So you're going for parts of these movements, not the entire trend or corrective movement that you may sit through, so to speak, when you trend trade. All right, so does that make sense, kind of? So when you're thinking scalping, you're thinking very short-term swings in the market, where literally you're probably getting maybe anywhere, depending on the kind of scalping you like to do, between 5 and 10 points. All right, and so it's not that many, whereas you're trend trading, you may try to get 50 to 100 or more points because you just stay with the trend. So that's kind of something you need to think about when you do that. Now, when you talk about also prop accounts, all right, when you want to trend trade, it's actually better to get a larger account, because in a prop account, what happens is you have something called a trailing drawdown. And so for like Apex on a $250,000 account, that trailing drawdown is 6,500, which means you can only lose 6,500 bucks before they close the account. All right. Now, that's actually quite a bit and good enough for being a trend trader, provided your trade size on a trend trade is going to allow you a certain amount of losses based on your testing that you need to endure in order to be a successful trend trader. So a larger account will give you a little bit more room for those markets to breathe in a trend. Now, when you talk about scalping, the most popular account is right around a 50K account. And the drawdown you're allowed on that is 2,500, but you're not going to have those big swings you have to endure during trend trading, right? So that's kind of important difference. So therefore, these tend to be better for scalping. On the prop accounts as well, your goal to either get funded or start to receive payouts is $3,000. So you have to, your account has to hit 53,000 in order for you to be considered either passing the evaluation account, or if you're in a funded account, in order to begin the payout process. In other words, actually getting money deposited into your account. On the $25,000 account, the trailing drawdown, like we said, is 6,500, but the profit you have to get is 15,000. Okay, so in this case here, you can see that even though your drawdown is higher, to get the goal is twice as much, whereas in this account, it's just a little bit more than the trailing drawdown. So for scalpers, it makes sense to do the 50K account because the ratio of drawdown, trailing drawdown versus goal is closer together. So it's considered a better ratio, so to speak. But nonetheless, the 250 account is probably the best one you could use for trend trading. Any questions on that? Anything, because it is kind of a little bit confusing, especially if you're not used to how the prop accounts work. Now, if you don't have a prop account, all right, then you don't have to worry about a trailing drawdown at all, okay? You still, of course, should use risk control, but you can be a little bit more lenient in your size of account because you don't have to worry about the drawdown aspect of it. So that's kind of an overview of scalping versus trend trading. And when we talk about trend trading, don't forget, these are intraday trends. These are trends that appear maybe for 20 minutes on some of the time frames, maybe a couple of hours, depending on the time frame you choose. So all that is basically going to be built all around how much time you have to devote to this and also to what you're comfortable with, okay? When you start out, you should start out small because the feedback comes back at you very, very quickly. Now, the other thing, and let me just erase this, the other thing you have to think about when day trading, and I'll just put DT up here, is unlike position trading, you literally, the large institutions, all right, are competing against you when you day trade. And what they're able to do is basically run the prices through certain liquidity in order, and certain price support and resistance levels, basically pivot points, to grab liquidity. And they're very good at that. So when you devise a scalping system, it has to take into account order blocks and these areas where they grab liquidity. When you're trend trading the intraday markets, not so much, okay? Because at that particular point, your stops are not going to be so close that you have to worry about liquidity grabbing to be as big a problem as when you're scalping. So that type of thing. All right, so here is my chart set up on NinjaTrader, and you can do this on any platform. There's quite a number of them that you can do it on. You got Quan Tower, you got Tradeovate, etc. Okay, so quite a few. All right, so what I like to do is actually I'm going to change this over to more smaller time frames. So let me just scoot this over here. So now I'm going to build this around a 5-minute time frame here. Okay, so there you have a situation like this. All right, now even on the 5-minute time frame, I'm just going to bring this up a minute. All right, let me just get rid of this red line here. you can certainly see, all right, this morning the market's open and immediately started to trend downward. All right, now notice how using the pyramids, it makes for a very easy and orderly way for you to stay with the market until the market closes, okay? And that would have been a really profitable trade without much work. Really, I mean, it'd be very simple. Now, if you were scalping this, you have to worry about all these areas, liquidity areas where they run them, okay, in order to pick up liquidity. So you have to keep that in mind, and they do pick up the liquidity because a lot of the institutions, before they drive it down, all right, they have to gain some type of reaction and run some stops and so forth to get the liquidity. Don't forget, when you're trading the market, if you're an institution trading the market, you're not manufacturing things to trade. You have to actually go out and find them in the marketplace. And they do that by running people's stops and then taking the position in the opposite direction. That's called grabbing liquidity. So in this case here, a 5-minute time frame works well. Now, notice here we've got the 1Bs and 2Bs, all right? And look where they actually show up, near major pivot points, all right? So a scalping technique would be to use the 1Bs or 2Bs and scalp in between these areas where they're grabbing liquidity. So in this case here, for example, in the 5-minute time frame, and you see this on all time frames, okay, you have areas where the market moved up, took out this high here, all right, grabbed liquidity, a 2B formed, and then off it goes. And then look at these huge wicks down here. This is like an 80 to 120 point move. And if you were thinking about the NQ or the MNQ, that's quite a bit of money. So in the NQ at $20 a contract, all right, a 100-point move is $2,000. All right, so that can be a big move if you catch it right. But in any case, all right, these are all areas where the market was moving down to grab liquidity and kept on going and going. But as a trend trader, you were already going in the right direction, so you don't have to worry about it so much. But if you're a scalper and you're caught short here and it goes down there, chances are your stop's going to be a lot closer because you're not going to allow yourself that much of a drawdown, especially if you're trading an account like a prop account that has a trailing drawdown. So you have to manage your losses very, very carefully when you're dealing with a prop firm. All right, and you see this on all time frames, okay? On this chart here, what I did on this chart is I loaded the value gaps, all right? And basically, these are areas where you have a gap in price, and usually an order block usually precedes that gap. For example, this is an area, all right, that was being accumulated up here before the big drop. And so a lot of institutions are working this area here, and that would be considered probably this area in here would be considered an order block before a big breakdown. So you have that type of thing. And there's a variety of different rules and software that you can get that will show you the order blocks and the fair value gaps, like I'm showing you here. So the idea is that usually if you're scalping the market, you wait until you hit these extreme levels and then go ahead and trade once the liquidity is taken out to the downside, all right? And what I usually do too is use a Bollinger Band, and when both the liquidity and the Bollinger Band are up here, and if I get a 1B reversal up here, then I short, okay? And I'm usually pretty good for probably anywhere from 5 to 15 points on that next move. And on a 1-minute time frame, more likely between 5 and 10 points. So that's kind of the thinking behind it. You have to be very patient when you scalp the markets, because there's times when if you went in, it's a gamble, it's a guess. It could go either way short term, all right? Even though you may think it's going to go down here, they may run liquidity first before it goes down. So you need to wait for it to reach certain pressure points where the probabilities are on your side that that's the best place to take a trade. And so these are the types of things a scalper has to keep in mind every time he begins a trade. Now, again, the pyramids, if you're trading the pyramids, you could go short here, put your stop here, all right? And you would get stopped out if it came back up and ran the liquidity here, okay? But if the trend has broken a channel and you think it's coming down and you've got a nice area here where you'd probably enter a scalp trade anyway to the downside, then that's probably a pretty good point to base a stop off of. And so when you take out that pyramid here, that's a pretty good trend trade to the downside, all right? And then you get a big price bar like this, and you're off to the races. And then there's certain things you look for when you are scalping or even trend trading. If you're waiting for a trend trade, you know, you don't have to do just one style. You could do different styles of trading. A simple trend trading technique, if you didn't have the pyramids here, is you look for bull and bear flags and breaks from those and put your stops on the other sides of those. But occasionally you get what I call a black swan event, where you have a price bar like we had at the close today. And when this came down, there was a fair value gap and an order block area based off pricing a while back. And we'd have to go, probably best thing to do is go to the 5-minute where I can show you that. Let me open that up for a minute. But if we go back here, you'll see there's a lot of liquidity sitting here. And what that means is that anybody that's long, all right, if they're long and they're not out, they're going to get out here. And yet at the same time, you're going to have a lot of shorts go here. So if you're an institution and can run this, you're going to pick up the stops from the long positions that are left and everybody entering a short. So think of all the liquidity you could get and then run it back up. And that's kind of exactly what happened here towards the end of the day. Today, if we bring this up here, you can go back here towards the close here today, and you can see these large price bars here taking out that liquidity and then bouncing back up. So another thing I like to do is wait for a black swan event, which is a unusually large, uncharacteristic price bar based on the average true range of the other price bars. And then look to see if we're taking out the liquidity at the bottom, and if we're in an previous order block area, and even better, a fair value gap area. And if we are, and we're below the Bollinger Band, then I immediately take a trade in the opposite direction, set my stop under here a few ticks to allow for maybe one more liquidity grab before it goes. But that is a high probability trade. And so if I wait for one of those, you can literally make a lot of points in a very, very quick period of time. And it's kind of a neat thing. All right, so there's a lot of opportunities in day trading. It's not easy, all right, but by the same token, it can be done, but you're gonna have to learn how to do it. And so it's kind of fun to talk a little bit about it. We're almost at the end of the session, but I just want to go over some of those points. Anybody out there currently day trading either at night or during the day? At night's the Asian markets and the London markets. The New York markets during the day are the best ones because they move the quickest, and they tend to be more fun in terms of the action. But also too, there isn't enough action. And again, I've traded them at night many a time to keep you busy. And honestly, when you're first starting out, the night market might not be a bad place to start because it's a little slower. So you can kind of get your feet wet without having to worry about fast moves. Okay, fast moves are fine once you become structured and pretty used to how you want to run your business in terms of day trading. So a lot to it, but a lot of fun. It's not for everybody. All right, some people may not just plain like it, but if you try it and you really like it, I'll tell you, you can do very well in it, and it's kind of a fun thing to do. All right, let's see what we got coming in. All right, so yeah, so we got quite a few people trading. That's good. All right, I got a couple people trading the fair value gaps. Yep, using the art reversals in the fair value gaps is an excellent way to do it. So that type of thing. I think the prop firms are going to change the business. I think with the prop firm, I actually think, believe it or not, I think other brokers like TD Ameritrade Schwab will probably start offering prop accounts. I think it's going to be an area that takes off. I also think that they're going to start regulating it more. I think Apex is already starting to get ready for that. But I fully anticipate regular brokerages where you may be trading already start to offer this as a possible inducement to signing up to them, having a prop account. You might find some of the large brokerages even buying out some of these firms that do it already. So I think it's very popular right now, and it has taken off in the last year and a half. All right, so let's see. Jerry, let me see. Bennett, NT connects direct to your Apex. Absolutely, yep. So all you have to do is come down here, go to connections, and I got a couple of Apexes, and you just connect there, and it will just show up right there. It'll just connect to their data provider and all your accounts. And the other neat thing about the Apex system is that, for example, there's something called a copier. So if you get a variety of different accounts, you can copy them over to the other account. So for example, let's say you had 20 $50,000 accounts and you wanted to trade all 20 simultaneously. So let's say you did that, all right? So if you, for example, your goal was to make $200 to $300 a day, and that doesn't sound like much, but guess what? Let's say you made 200 spread across 20 accounts. That's 4,000 bucks a day, okay? Let's say you did that 3 times a week, all right? And now you're at 12 grand a week times 4, and that's how these people are making all this money. So it's not like you have to make thousands and thousands of dollars in a $50,000 account. You only need to make, all right, a couple hundred or less, depending on what you're comfortable with, and you can pull out a decent amount of money. I just had a friend of mine get an $80,000 payout from Apex for about, I'd say, 60 days of work. And that was just one of his many funded accounts. Are there connection instructions available in the Ninja ecosystem? There is, but also too, when you sign up with Apex, they'll tell you exactly how to connect. It's really easy. You're going to get a username and a password, and you just go in to the connections area and put it in there. No big deal. Super easy. In fact, even if you don't have a NinjaTrader license, Apex will give you one. Let me just see here. I'm just going through all the questions. Okay, I think I got them all. All right. So it's something I think, if you got the time, I think it's a really fun thing to do. If you have a job during the day and you still want to do this, you can do it at night. All right. Jean refers to the NASDAQ as my mistress because I'm usually with the NASDAQ at night.
That's
So,
no joke.
and that's no joke. And I usually go to bed at what time, Jean? About 2?
Oh yeah.
So I'm up for quite a bit at night doing this. And then I usually start in the morning as well. But,
Hey Ben,
that's, I enjoy it. Yeah.
you should talk a little bit about how it's different than, because you trade your own account, you know, with actual cash versus the psychology of trading these prop accounts and how it's
Well,
almost like a video
I
game.
I know where you're going. Yes. Well, the fun thing is the younger generation today, it's very interesting because um, since I do a lot of scalping, there's some Discord channels that I belong to. And they're all young people for the most part. So here I am in my 60s and I'm chit chatting with kids 19 to 25 years old who are making absolute tons of money doing this. And they treat it like a video game because it's not their money. Okay, it's a subscription fee, and they do put an investment in. If you're going to have 20 accounts and you got to pass the evals, you're going to have a couple $1,000s invested. But they trade these things like a video game. If they get stopped out, that's like getting hit in the shoulder in a shooter game. If they wipe an account out, in other words, they go beyond their trailing drawdown, that's like getting killed in a video game, and they just pick it up and start over. So there's no feeling of remorse or any guilt or really any fear and greed because they just keep going. And I think that's one of the reasons they do so well is that they don't worry about it too much and just let it flow. And they get really good at spotting patterns and opportunities and using indicators. And it's very fascinating, the psychology that they have. So when you have too much fear or even too much fear of missing out, all right, FOMO, then the problem is then it kind of affects your flow. And so you kind of got to get away from that. So the less fear you have, the better in the markets. And basically, I think that's one of the keys to doing well. But they treat it like a video game, right, Gene?
Yeah, absolutely. And I think it's interesting because, different age groups, I guess. From our group, everyone has only traded just real money. So you know what it feels like to, people across the board know what it feels like to lose real money that you worked really hard for. But these kids, when they
Well,
lose a prop account, they don't really care because it's
well,
not
and
real
and
money.
that and that can go not for just kids, but for anybody that trades these prop accounts. And basically, I've had to relearn a little bit about my attitude towards waiting for that absolute 100% perfect setup. So now what I do is when the setup is good enough, I'll go in, and then if it even improves or get a little better, I may go in again in the same direction, keep an eye on my risk control, but not have the fear that you would have associated if it was your own money that you were trading. It is a difference. Does that make sense?
Well, let me just jump in real quick too. I wonder if these kids did get real money and had $100,000 account and lost 50,000. I don't know if they'd have the same. I don't know if they'd be able to trade real money as well as they're able to do the prop.
Well, that might be true. All right. I have to tell you, some of them are very talented and very, very good at what they do. And I would be surprised if they lose that much money anyway. But the point is that they may trade differently enough if it was their own money that it would make a difference. So I hear what you're saying. If anybody has anything they want to add to that, feel free to do so. But that's kind of what I've noticed being on Discord and listening to the kids and watching how they do it. And believe me, don't get me wrong, some of them are very, very talented and very good at what they do. And they got there by being able to trade for a few years in an environment where they're not losing their own money. Yes, they may, blow out an evaluation account, but that's a lot different than blowing out your own money. And so they're able to stay in and keep coming back and improving and trying because it's basically not a big investment. So they're able to continue on. And I think that's the key of being really good at it, at the day trading stuff, is you got to be fast, good, fluid. And that comes with time. Anybody can achieve that for the most part, but you have to work at it. And in the beginning, it's painful because you're going to lose a lot, but that losing is learning. And as long as you're not losing hard-earned dollars, but instead these prop evaluation accounts, it's not as big a deal. And you can always do a simulation account until you get it hammered out, and then do the evaluation accounts and see how you do, and then go from the next go to the next level up from there, which is a funded account. So anyway, it's a lot of fun. I can't tell you how much I enjoy it. I love it, and I think it beats playing solitaire at night. Put it that way. All right. Anything else? Going once, going twice. Gene, any last tidbits?
Happy Halloween.
Oh,
What's
yeah.
everyone dressing up as?
That's another thing we got to worry about tomorrow. That's right.
Hey, Al, I see Al just came in. Al, are we still meeting tomorrow in Yummy, even though it's Halloween? Anyway, yes, so Halloween, so hope everyone has a great Halloween. And trick-or-treaters and all that good stuff. And I guess that's it.
Yeah. And then we also are going to be coming out after the holidays with an email regarding our tutorial we're going to have here in the new year. So that's going to be probably January, February here in Tucson. And one of those days will be spent day trading the markets as well. And a lot of the techniques, you can use for swing trading stocks too. So it just depends on what you like to do. All right, so that is it for today, and we'll see you back here next week. And like Gene says, have a good Halloween.